All right. Good afternoon, good afternoon, team. I hope you're all having a wonderful Sunday so far. Thank you all so much for joining us for another Sunday watch list. For today's meeting, we don't have a lot to discuss. It's going to be a very straightforward week, and our our analysis is very clear. So, first, we're going to start off with negative spy. Just as mentioned on the weekly watch list here, I'm watching. I'm watching negative spy. So basically, negative spy here is the opposite of spy, and simply uh, what this helps with is that instead of us looking at, let's say, the overbought conditions, what we can do is we can look at this particular chart here and see the oversold conditions on the same side. So having a doji, which is a reversal, having a gravestone doji, a reversal candle on the weekly time frame for a spy means that we have a dragonfly doji reversal, which is a bullish candle on negative spy. So just looking at this particular chart here, we can tell that we are very far away from the 20 EMA line. Whenever we get very far away from the 20 EMA, one way or another, we end up going for a retest at the 20 EMA line, test the strength of the bears, and then go for further selling. So whether it be upside, downside, this always ends up being the case. And as we can see here from the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, over the last 11 weeks here, we have been heading lower and lower and lower on negative SPY, which means higher on the S&P 500. So we have been pushing higher on the S&P 500, and so far we're looking like we are finally overheating on tech momentum, exhausting, and we could see some selling. So what are the targets here that I'm looking for the S&P 500? Let me pull up my analysis here. So a negative spy here, we're going to take a look at the weekly time frame, and then we'll cover the 4-hour time frame as well. Negative spy here, negative spy chart shown below is an inverse of spy price, and while spy goes up, negative spy goes down, as we can see here reflecting within the chart. Negative spy placed a bullish hammer reversal last week, and heading into this week, on Friday's closing session, placed a dragonfly doji reversal, and so far we have those two bullish reversals taking place on the weekly time frame. Both of these candles represent price action over the last 2 weeks, showing signs of exhaustion, and that means that we could either see more digestion here, more consolidation, or a pullback. So if we get a pullback within the S&P 500, this means that negative SPY is going to push up. So heading into the upcoming weeks, we are anticipating SPY and the overall market see weakness followed by selling for at least a negative 8% market correction. So where would this negative 8% market correction be? It would be around the 530 level. So if we go to the hourly time frame here, it looks like we have this potential double top. And if we fail to see any upside heading into we have Fed minutes that is on. Actually, we have Powell speaking on Tuesday, and then we have the Fed minutes report on Wednesday, and we have to be very careful because on Wednesday, that's also the 4th of July, and it is a holiday. It's a half-day holiday, which means the market closes early. So having that event there also just makes it a all in all a low volume, but at the same time a volatile day. So we got to be careful. Now, here's my theory: if we go into this week and we get those data priced in and price action still fails to see any upside, then this would mean this would tell me that we are overbought and that we are going to break below 542 and then 539, and we won't stop there at 539. We will head down all the way to 532.69 over here. So if that turns out to be the case, this is where I expect buyers to show up, and this is where, as a bull, you can wait patiently and catch that opportunity with me. This is what I'll be looking forward to. So again, any upside this week followed by weakness can be great opportunity towards that 530 target here on this smart money zone. And this would be an amazing opportunity for the bulls to step in for that rebound back up. All right. So now that we covered the S&P 500 on the hourly time frame, let's go back to the weekly time frame and take a look at what's happening on the weekly time frame. We have been running up from 411 all the way to 550, and at 550, we are finally seeing a solid resistance line. Those two wicks there on the weekly time frame signify clear resistance right here. This shows us overwhelming supply orders, and as long as we continue to reject 550, this should be a very, very clear ceiling resistance for further downside on the S&P 500. So we are definitely still far away from the 20 EMA line. As I mentioned earlier this week, when we are far away from the 20 EMA line, no matter what happens, we still end up selling off. So if we go back to earlier this week, I did share that we would be shorting the market if we sense any sort of there it is. So we said that anticipating SPY to head down to 539 in the next week or two, the upward movements will be shorted until we sell off down to 539 area. So anticipating SPY to come down to the 539 area right here, and I really believe that we will not be able to hold. If we come down to the 539, I think we will also go down to the 532 area, 535, before we finally see some buyers show up, because this would exhaust the sell pressure on this double top formation and also on this potential rising wedge, giving this market a little bit of a cool off from this overheating market. As we can see here, the volume on Friday's session was very, very big. And as long as we sense weakness and we fail to take out 550, especially anywhere below 547, that's a short opportunity to me heading into the next 2 weeks. Looks bullish, but it is. So let's go to the shorter time frame. Ivan, here's the shorter term time frame for negative SPY. So looking at the S&P 500 here on the 4-hour time frame, we can see we saw some sellers showing up. We saw some sellers showing up there. The volume is also reflecting that selling. And if we look at negative SPY here, we have that volume coming in. So it just looks very clear to me that we are going to retest 539.93 potentially in a low volume market. So considering that we also have a short trading week, it's somewhat of a holiday because of the 4th of July. There won't be many traders participating. And whenever we have these short weeks, we have been getting these market pullbacks and digestions. So that's what I'm trying to share with our team here. I hope our team understands what I'm trying to say. One way or another, be careful. Don't have a lot of positions open at the same time. And yeah, definitely don't be holding more than 5 position of calls, because this is one of those weeks where the market can really pull back and see some digesting. All right, so let's also cover so we covered the 4-hour time frame. And now we are going to cover QQQ on the daily time frame as well. So QQQ, which is where the weakness is coming from. Now, do keep in mind, tech. Do keep in mind, team. Tech is weak, but financials are strong. Industrials are strong. So it is possible that the S&P 500 itself can hold, but this is the sector that I believe is going to see the big selling. QQQ, which is dominated by tech, this sector is seeing weakness from Nvidia and also other tech stocks. It had a strong rejection at 486.94. resistance level, confirming the solid ceiling there, and closing below the prior day low. So if we go to the daily time frame here on QQQ, this particular candle on Friday went to retest that established resistance there, confirming it, making it the third test at that resistance, and also closed below the prior day candle, below Thursday's candle low. So that is a bearish signal, and in most cases followed with more downside. We have Powell speaking on Tuesday morning, and then we have the Fed minutes release on Wednesday, which is basically the notes from the recent FOMC meeting. We will be waiting to see how these two events are going to affect this Friday's massive topping candle triggered at this established resistance. Now, if we continue to sense weakness on heading into this week, anytime heading into this week, and if by Wednesday both of these events are priced in, and we are failing to close above 486.94 resistance, and that remains intact on weakness, we will look for more downside to 473 below 482. So as soon as we fall back down below 482, at the moment we are below it. We're at 480, but I'm considering that we would get some upside either on pretty much tomorrow, on Monday, or even Tuesday, and even heading into Wednesday. But then on Wednesday, I'll look back, and if I see that they're below 482 and they're also below 479, that is a very clear signal of weakness and exhaustion on tech, where I would be anticipating a retest of 473.77, where I would really expect this one to crack, because this would be a double top. If 473 cracks, we can go all the way down to this smart money demand zone concept at 457. So again, if by Tuesday both of these events are priced in and our resistance at 486.94 remains intact, on weakness, we will look for more downside to 473 support, which is this level right here on QQQ. There's a good chance we may not hold support at 473 and instead head down to 460 lows, firing that potential double top here. Again, if we look at some of these stocks here for NVIDIA, NVIDIA is really not looking good. It looks like a potential head and shoulders here, as we can see on the 4-hour time frame. And as we discussed in the last meeting, in the last Sunday meeting, this candle here is the same. This candle there is the same as that candle. So we have printed the same candle that triggered the recent correction on tech, and so far it's come out to be true, and it's looking like a potential bear flag to me. So as long as this bear flag here remains, I think we can get another leg down lower and further see more correction on NVIDIA. So again, team, tech is overbought and showing overheating signals that are due to cool off in a correction. Bulls can find opportunities at the 460s on QQQ, just where the smart money demand zone is, as we can see here. So if we can come down to the 460s area, 460 lows here, retest that big demand zone, that will be some amazing opportunities. So if you want to take advantage of this potential downside here for QQQ, you can either pick up the July 17 470 call, 470 put for a swing trade into next week, or you can wait for market to see some upside heading into Tuesday or Wednesday, and then pick up the July 12 475 put in a cheap discount scenario. You would be anticipating the 475 put to go in the money at the loss of this support level. And considering that we have an extra week, it can print, especially if we do see that downside in the market. But yeah, team, I also do want to note that we are greatly overbought from the 200 SMA line, and as history has shown us, whenever we get very overbought from the 200 SMA line, we always one way or another correct back to the 200 SMA, get very close to it, and then see further upside. Can you put that in the Discord? Yes, sir, I can. Will do. Make a short review on IWM and Cisco. Sounds great, Ivan. We'll take a look. Those are rain bonds trades, and I'll be more than happy to cover. But yeah, team, so far, do we have a good understanding heading into this week for what we can expect? And we can go over the stocks too. We can take a look at Microsoft here. Microsoft printed a large bearish engulfing candle, a large bearish breakdown candle, followed with that doji here. So if we continue to see further selling, or if we continue to see weakness where we fail to take out that bearish engulfing, this would provide a great opportunity for, let's say we see a small green candle and then another small green candle, but we still remain below the 50% retracement. That would be a great opportunity for a short position momentum on Microsoft to basically head back for some sort of pullback. Let's cover Apple here. Apple also printed a large bearish supply bar on Friday session, also showing weakness. Let's take a look at NVIDIA here again. I know we looked at it, but here's NVIDIA as well, printing a possible bear flag here that can see more downside towards this gap fill at 106. So once we see NVIDIA coming down to 106 to 110, that will be an amazing opportunity for us to go long and buying shares long-term for NVIDIA. So around the 110 to 105 area, that will be an amazing opportunity to buy long positions on NVIDIA. All right, all right, all right. Now that we have covered QQQ and NVIDIA, I do want to just go over the events for this week. It's important to note that we have the Fed minutes. We have Powell speaking, I believe, on banks on Tuesday morning, and then we have the Fed minutes release for the prior FOMC meeting that is being released on Wednesday, which also does affect the market. So those two, we'll be watching to see how those two events are going to price into the current prices, the current scenario for the market, and yeah, team, we'll see how that turns out. But I do want to show you one last thing here on SPY before we move on. Now, I want to show you this cup and handle on the S&P 500 that played out on the daily time frame here. We can see this cup and handle pushed the S&P 500 prices from 420 so far all the way to 450s, and it is definitely at the end stage of this run up, and it could trigger a big correction pullback. If we come back down anywhere to on the S&P 500, I'm not saying that we will come back down to, let's say, the 480s area, but worst case scenario, if that ever happened, that would be amazing opportunities anywhere between 500. So I do want to note that we are still bullish on the long term. It's just that the market is overbought. We have gone up for some time, and the market needs to digest from here for the upcoming weeks. Thank you, Michael. Thank you for joining. We'll be going over the banks next, team. So the sectors that are showing strength here, we covered the S&P 500. We did say that there can be potential pullback on the S&P 500 that we should be looking out for. And we also mentioned that we would be bearish on tech heading into this week, expecting the tech sector to pull back. Now we are going to cover the index that is going to be showing any strength if there is within the markets. So the Dow Jones here, the Dow Jones has a beautiful bullish ascending formation, and I believe this one is going to digest up here and not see much of a pullback. And if the market does see any sort of upside, this particular stock is going to, this particular index is going to greatly benefit and further push the markets higher. So the stocks that are in the Dow Jones are, let's take a look. The stocks that are within the Dow Jones are UNH, Microsoft, GS, HD, CAT, AMGN, V, McDonald's, CRM. So if you notice, Apple, JPM, Amazon, BA, if you notice, a lot of these stocks are are pretty much a mix of financials, healthcare. They're mostly industrials stocks. So one stock that in particular that I'm watching within the industrials is CAT. So CAT Caterpillar here. Caterpillar has a had a beautiful, beautiful demand retest, a retest at that demand zone. As we can see, we had a nice doji candle that just had a beautiful upside follow through. And so far, that retest at the demand is now getting a confirmation with a demand candle above the 20 EMA line. And this inverse head and shoulders here. So I saw one of the comments on our Facebook community that said that chart patterns are have not been proven to work. Now, let me tell you why that trader didn't know what he was talking about. Chart patterns are pretty much meant to show you market structure. So they're anatomies for the market structure. In this case, what is it showing us? It's showing us that the market, this particular price was making lower highs, lower lows, lower highs, lower lows, lower highs, lower lows. And then finally, what happened was we are seeing a trend changing structure where we placed a low and now we placed a high right at this resistance, right at that resistance, and now we are placing a high, a higher low. So this particular low is higher than that one. That's a higher low, and now that we have a higher low, this is going to trigger a higher high formation somewhere around the 343 area in the upcoming week here. So basically, what I'm trying to say here is that chart patterns are simply anatomies for market structure, and if you understand all of the chart patterns, it's going to greatly help you understand and further pretty much anticipate where price action is heading to in correlation with the market structure. So in this case, we have a trend changing structure that's getting back above the 20 EMA line, and we are in the overall uptrending market. This means that we can be anticipating this resistance to break out and us pushing further higher. But yeah, Team Cat is definitely looking good. If you want more, if you want to basically learn more, let me just find that analysis. I believe Rainbond posted on our. Oh yeah, so if you want to learn more about this particular setup here, you can read Rainbond's analysis as well, and you'll see more. So um, yeah, team. For this particular week, Cat is one that I'm watching for a swing trade. Now let's go over Rainbond's Cisco play. Now Cisco stock is I see that Rainbond shared a bullish falling wedge. If let me zoom in. So here's Cisco. Ivan wanted me to cover that. This is a bullish falling wedge so far, and honestly, I also really like this setup. Rainbond said that this particular stock is breaking out of the falling wedge formation on the daily time frame. Once we break 47.86 overhead resistance, we could trigger upside towards 48.50 and even testing the 200 SMA line there. So for Cisco, I was honestly, I was looking at Cisco today, and I was looking at the long-term contracts of it. If you guys want, you can pick up a 50 call for Cisco, and it's currently trading at 1.95 with 11,900 open interest. So this is definitely looking like a good setup. And I'm honestly seeing a lot of rotation into these AI stocks. So definitely watch Cisco here. Now let's go over what else? IWM. IWM. So team, the reason why IWM is getting a lot of rotation here is because there's a lot of banks within IWM's small cap. There's a lot of regional banks. So this stock is starting to see strength on lower inflation data. Inflation, especially the recent PCE data, really showed that inflation was coming down. We are now seeing lower inflation on 55% of the goods over the last pretty much from the pre-pandemic levels. So this is really good, and this means that inflation is heading lower. So if that turns out to be the case, small caps are going to greatly benefit from lower inflation. Let me show you how or what this stock is up to on the bigger time frames. As we can see here on the monthly time frame, this stock has a big imbalance move. So what exactly makes an imbalance move? Now, what's an imbalance move? An imbalance move is a directional move in the market. Okay. So this right here was a big imbalance move, and that those candles there were the consolidations. So this right here was this was a big imbalance move. And why is that imbalance? Because we are in a directional. So that's what the term imbalance means. It means that it's out of balance and it's trending. So that imbalance created this digestion, which led to another imbalance. Now, within the supply and demand dynamics, this is just beautiful. You can see the massive demand candle on the monthly time frame, which led to a beautiful starting entry over the upcoming years. So looking at this particular chart here, we are seeing something very similar. We're back above the 20 EMA line, and we have an imbalance here. We have a rally, we have a base formation, and now price action is really starting to hold. If you notice, every single month on IWM has placed a higher low candle within those candlestick anatomies. So that tells us that demand is higher with each of the selling month by month. So eventually they're going to tackle this resistance at 211, and they're going to break out all the way towards this level here, retesting all-time highs at 234. Now, this is very possible to happen within the next 2 years, especially if inflation continues to go lower. So team, I do want to note that during high inflationary times where rates are high, IWM suffers greatly. And this is because small caps do not do well in high inflationary times. But now that inflation is heading down, this is exactly why the S&P 500 is showing strength over the other ETFs. So if we look at RTY, which is the Russell 2000 futures, we can see that the Russell 2000 is really showing a lot of momentum. And if we draw this big zone here, it looks like we really are consolidating. We have been consolidating over the last 8 months here, and this could really lead to some heavy upside heading into the next 2 years if inflation continues to go down. So again, team, eyes on IWM. Small caps are going to continue to do well over the upcoming years, over the next 2 years, even in the upcoming months. All right, now that we covered IWM, I'd like to go back to banks here, team. So the sector that I'm bullish on, personally, the sector that I see some upside on heading into this week is banks. So banks are really starting to show momentum here. WFC came down to this smart money zone, and team, if you are not part of the mentorship, you are, honest to God, you're really missing out. You're seriously missing out, because I'm telling you, ever since I learned the supply and demand dynamics, you can go ask anybody. Once they learn supply and demand dynamics, there's no going back. You cannot see price action in any other way. And I'm really telling you, if you don't have access to the mentorship program, you are really missing out. I will be doing a 4th of July sale for the whole month, and I'll also be very active too, in fairness to our team. So we're going to go from the 319, which is the initial one-time fee purchase for the lifetime, to just 249. And this deal will stay on for a month so that you can make some trades, save up some money, and get the mentorship. Because I'm telling you, you guys, I may be busy, I may do some other stuff, and not be able to be, to be alerting these. But I'm telling you, if you know what you're doing, if you know these things, you're going to notice yourself. And I'm starting to see that within our team as well. And I'm really, really glad to see that, and it really encourages me to work harder, team. So this was a beautiful smart money retest at the demand zone, followed by a rocket move back up on WFC. If we look at JPM here, now the one that we traded as a team was JPM. So for JPM, we can go back to let's see if we can find it. JPM. I believe it was in the swing trades. All right, so here it is. Hey team, I would like to mention the way we traded JPM. That was directly from our material we learned in the mentorship program. That was a smart money concept in which I got us in ahead of time yesterday. Now, you don't have to do that and get the pretty much buy him ahead of time, but there are times, there are occasions where you can do that, especially if you have experience. Now, this particular trade was a smart money zone. That alert that I sent out for JPM was a smart money, and look at where it's at right now, team. Let me go ahead and draw that zone. Now, this is the smart money zone. Let's bring it down here and look at where price action is trading at now, team. This is where price action is at. This is where we called it out, and this is where price action is trading at. So let's go over our JPM analysis. So we bought the JPM call, the 719 200 call at 227. So the 0719 200 call, we bought it, and now this one's already up 100%. Now it's up 100%, and team, it's already going for another rally here, as we can see here. So banks are really looking good. Looks like JPM is going to get another green upside day. And yeah, team, this right here, this trade was called out strictly using the smart money zone that we recognize there. So another stock that I'm watching for this week is Uber. Now, Uber stock has been retesting this particular resistance for the third time now, which means this is confirmation. We have a massive demand candle here, so this is good. And any consolidation here at 73 will eventually follow up with more upside for a breakout towards the 78 and the 80 area. So I'm watching Uber here for more upside. And let's take a look. So we have a rally. We have a rally here. Oops. We have a nice rally, and then we had a nice consolidation on the weekly time frame, and now it's starting to get ready for another breakout above 73.25 for another imbalance move. So I'll be watching this particular setup, and we caught this one from here, by the way, team. We caught Uber right above the 20 EMA line. This is where we entered a call. We made some amazing profits, over 100%, and now we are getting back in on this potential base rally for another move higher. So let's take a look at what kind of contracts we will be trading for Uber. We can be trading, honestly, several calls. Let's take a look. Several different it depends. If you want to take a short-term approach, you can buy, let's say, you can buy the July 19 or even the August 16. And if you want to swing trade and you don't have a lot of time in the markets, you can pick up the September 20 77.50 call, or even the September 20 80 call at 2.50. It's far out of the money, but if we do get that breakout, you're still going to benefit greatly from this trade, because the way that we are trading it, remember, we are not meant to get we're not meant to, every time we trade, right? We're not meant to get that contract going in the money. It's great to have them in the money, don't get me wrong, but it's okay to sometimes trade a contract like it's a stock price. So here's what I mean. Let's say we enter at 250 and the contract value goes up $100. We sell it at 350 and we just get out right there. We don't have to have the contract going in the money. We simply just want to take advantage of the momentum of the breakout there and pretty much call it a trade. So Uber is definitely looking good for the long term. And um, yeah, team, make sure you put that on your watch list and you trade it the way that your style is um, for this directional move that's possibly coming up. All right, so we got TGT here. Now, TGT, although still in a downtrend, um, as we can see here, although it is still under this falling resistance trend line, it did retest that smart money demand zone, and we possibly have a double bottom. So what we are seeing here is it could be a mini inverse head and shoulders. We are getting back up above the 20 EMA line. Volume is coming in above the 20 EMA line, and this could pick up in momentum. So I'm bringing target to your awareness here in case you guys do like this particular stock and that you want to trade it. It's definitely looking good, especially once it starts to break this particular downtrend. I think bulls are going to step in and fill this gap here at 156 and even retest the 164 area. So keep an eye out for target here towards 157, sorry, 156 in the next 2 weeks, and then 164. All right, now let's go to Snow. Now, team, I'm holding Snow shares long term, and I have been holding Snow shares ever since the 160s. Now, the stock is definitely the reason why I'm bringing this one to your awareness is because earnings is coming up next week. Um, earnings is coming up actually, yeah, in about a month and 20 days, and this stock is now back down to this particular support level here, and it has held this support as we can see over the last 2 years. Now we have a bullish engulfing candle on the month on the weekly time frame that could possibly see another bullish another green candle on the weekly time frame pushing towards the 143 to 145 area. So I am bringing Snow to your awareness here after retesting that beautiful support level there and printing this bullish engulfing candle. Now the weekly time frame here definitely reminds me of CRM. Now, CRM was on our last week's weekly watch list. If you caught that, if you paid attention to CRM and that was on your watch list, you had some amazing days for the setup. So it's definitely reminding me of CRM, and I think this can continue to see more upside towards 167. So I am watching Snow here, team. With the market showing overbought and ready for a possible pullback, VXX will be on my watch list. It gave a nice bullish engulfing on the daily. Interesting, John. I always find people who don't believe in price action crazy. DE was just upgraded on CNBC. Awesome, Sony. That's really great to hear, by the way. This is really great to hear because I have also been watching DE for some time here. DE has been consolidating inside of the zone. And I think once industrials are ready, this stock is going to greatly benefit from the rotation and break out above 447 and head higher. Um, you know, something very interesting about about DE, Sani. Um, I was watching a documentary about DE, and now they're going from like farming materials to now they're saying that they're an AI company. And the fact that they're saying that they're an AI company is really something else. And I think this is where the upgrade may have possibly come from. So I will be watching DE to see if we could come back above the 400s. If we can come back to the 400s, this is going to trigger an expansion at least towards the 600s, the 550s to 600s. See, Chef Mike's in the house. Welcome, Chef Mike. Always happy to have you here. TGT was on my screener. Awesome, Pine. What was the results from the poll concerning the day times for the mentorship? Christopher, unfortunately, The option one won, and that was the Tuesday and Thursday at 6 p.m. PST, which is 9 p.m. EST. I will be honest with you guys. I really liked the second option because uh, it just felt it felt more comfortable for me personally. But all good, no problem. We'll get it done. I'm very flexible, so I can make it happen as long as the team prefers option one. I'm more than happy to do so. After all, this is what we were doing over the last couple of weeks. Now, Subha said, "Can you please review AMD?" Now, team, I am very excited to cover AMD because I have a good analysis for you. All right, all right, all right. So for AMD here, let's go over my secret folder here. All right, so I have a good analysis for AMD. Um, Now, team, AMD stock long term. This is AMD stock long term bullish case. All right, AMD stock long term bullish case. Uh, the stock chart has a potential cup and handle formation as shown on this weekly chart here. We have a massive cup and handle taking place on the monthly time frame. And the cup and handle as shown on this weekly chart that's formulated to the handle stage. So this particular setup over the last 6 years here is now at the handle stage, and the handle stage is just before the massive breakout. So I will continue to watch AMD. We don't know when we will get a large demand candle, but when that prints, that means we have our first starting trend demand candle. Keep an eye out on AMD. Keep on watching AMD for that large demand candle formation on the monthly and the weekly chart to catch the starting trend of the biggest move yet to be seen. We could see 270s and even 300 in the next 3 years. I have been buying AMD shares and also picked up an AMD January 16, 2026 250 call strike. And yeah, honest to God, I'm really loving this stock long term, and I will be watching this particular setup. Once we start to pretty much print a demand candle on the weekly time frame here, as soon as we start to print a demand candle on the weekly here, and we get above 170 area, I'm going to turn very bullish on AMD, expecting this to be the starting candle for a major directional move towards the 280s, 250s, and the 280s from this cup and handle formation. Inside red candle on the monthly time frame, pressure building. Very interesting, Christopher. Yes, sir. When I pulled up the monthly time frame, this is also something that I noticed as well. This month's candle so far, if we notice now, why is this so important to notice? Because lately the chip sector has really been getting beat up. We have been seeing Nvidia sell off and pretty much about every other sector, and AMD is showing strength. So the fact that AMD is showing strength here, I take that as a very great sign that they are setting up, they are further establishing this cup and handle for the future. Because eventually, I think AMD is going to be pretty much there will be attention for because AMD so far is, I mean, it's like I believe it was 16%, 16% market cap. Nvidia had the biggest, obviously, but that's what I'm saying. As they grow here, I think there will be more room for the stock to see the 300s. I'm personally very bullish on AMD for the long term. I'll just keep buying shares. Now, for NKE, I'm honestly I'm not sure how to feel right now. We definitely sold off from earnings. We thought earnings was going to be it. We had this trend here. We had this trend here that has finally broken. The trend was dating back all the way to 2011 here. and that trend now is broken. So as we can see here, the trend is broken, but the fact that we are holding a January 16, 2025 call, we can hold that contract a little bit longer to see if they are going to recover back up really fast. If they fail to recover back up really fast, we will sell that contract at a loss and reposition for a better entry as the stock further establishes, because eventually it's going to see some upside from these overbought levels. And the way that we will recover from this particular trade is that here's the thing, okay? We can only lose about 100% on our contract. Worst case scenario, we can only lose 100%. But the beauty is, if we enter the right contract around here, somewhere around here, or even lower, when the time is right, we can easily make over 150 to 200%. So we can make back our 100% and even make an additional 100% on top of that. And that's how we will make back our profits on NKE when we have the proper setup. For now, I think this is pretty much, this is bad. This is not something that we would want to see on our long term January 17, 2025 call. People stealing cars now, not sneakers. But yeah, team, unfortunately, this is the case for that's funny, Christopher. The more I think about it, because I've been hearing so many what is that? Car parts, especially in LA. There was actually just a death recently because there were there were there were thieves, stealing convertibles from cars, which is just very, very scary, man. Steven said there's always deaths in LA. Steven, we recently went to LA, and oh my God, why is it so dirty, man? Sam, I still like CME. CME does not look too bad at all. CME is trading right at this support level here, and we are seeing amazing volume coming in, amazing buy volume coming in. So considering the fact that we have January 17, 2025 call for CME, I think this one can be held a little bit longer to see if we can come back up and hit our break even. We're not too far at all. Now, in regards to LVS is not doing so good. It's still getting good volume. I would like to see more this week. I would like to see bulls breaking above 45.84 and heading towards this resistance line at 48. If this setup doesn't play out by the end of this week, I would say even towards the midweek, you can get out of LVS and pretty much reposition into the next good setup on the weekly watch list. I've had the same Nike running shoes for 10 years, no joke. Oh my. DKNG, let's take a look at DKNG. Oh, okay, I see. DKNG has a bullish engulfing on the daily time frame, but considering that we have a big supply here, I honestly don't feel comfortable buying into it. Without now, team, I used to be that kind of trader, like buying, let's say, a call here, but I'm not anymore. And the reason why is because if something is going down, it will continue to go down. If something is going up and we enter on the uptrend here, it'll continue to go up. So yes, the stock is in an uptrend on the bigger time frame here, but considering the fact that we have an imbalance move here, I would like to see more. Now, I will say this, Bahar, if you're, let's say, a swing trader, right, or even a day trader, and you see a setup like that, and you're like, you know what? I think bulls are going to step in on Monday and Tuesday. You can take a day trade or even a swing trade to further take advantage of a follow through green candle. But yeah, Pan W. Let's take a look at Pan W. Now Pan W here broke out from this resistance here, and so far we are heading higher. Now, this is not just going to head higher like that. What I think is going to happen is we will then turn this level into support, and then we will go up to fill this gap here next at 366. So far, we had a low here, we had a higher high, higher low, higher high, and then we could even see more upside before pulling back, creating another higher low, and then setting up another higher high. Can you check on Bank of America to see what it's doing? Now, for Bank of America, I'm very bullish on banks here. I think banks, especially with the successful bank stress test that we had, the Fed stress test, I think banks are going to see more upside, especially with inflation coming down here. Now, banks with the higher rates have been greatly benefiting. I know that some small banks are not doing good, but the bigger banks are greatly benefiting from the higher costs of borrowing, and I think they're going to see more upside for the bank. So eyes out on Bank of America for this base rally here above 40.70. This could see another rally towards 43 and even 45 heading into the upcoming months here. So Bank of America, WFC, JPM, I'm bullish on all of these stocks. Roku, along with other streaming platforms, streaming services, has been seeing some buying. But I'm not sure how to feel about this particular stock here, because there's just too much competition within the streaming services. So because of all the competition here, this particular stock, maybe we can even do this actually. This particular stock has not been performing too well over the last couple of years. So it is definitely starting to see some buyers at this level of support here. It does have a demand candle, but I just really don't see a lot of upside movement on Roku. SQ. Now, I was looking at SQ today, and honest to God, SQ is really starting to look interesting, you guys. It has a potential inverse head and shoulders here. It has been digesting here for a long time, not going lower, and really starting to see demand candles. So, this is a stock that I'm watching here. If we start to, let's say, if we get any sort of positive catalyst. Now, when we look at these kind of stocks, we need catalyst team. We need catalysts that can propel these kind of moves. So if we see some catalysts come in for SQ, I would really be watching this beautiful bullish falling wedge here to get aggressive towards 73, which is the first gap fill, and then we have another gap at 79. So if we do see any sort of catalyst, any sort of positive catalyst on SQ, these are the levels that I'm watching. Now that you mentioned SQ, it makes me look at V. Now, V for some reason sold off big, but honest to God, this may be a good opportunity to be watching. So we'll see. For now, we have a bearish supply candle, and I'm not really a fan of fighting bearish supply candles here. But if this does see any progress, I will keep an eye out for our team. So if this prints, let's say, a bullish engulfing back up above 268, I'm going to take advantage of the setup by alerting it for our team, so that we can get a great head start before earnings comes up. Team, that concludes my session for today. I do want to share with you all that I'm going to be. I know I've said this many times before, but I'm really, really serious this time, and that's also for my own good as well. I'd like to dedicate the next 6 months of my life to servitude for the mentorship program, as well as our Discord team and the 2K Cash Account team. So you are going to see me in the live trading room every single day from now, even if I'm not feeling it, even if I'm not sending out alerts, or even if the market sucks. You're going to see me in there, and at the times that I don't want to say anything or I don't have anything to say, I'm just going to play music. I was learning a lot from you all. And recently, I have been experimenting with a lot of awesome stuff, and I cannot wait to share it with you all. So I'm going to be very active in the live trading room. I'm going to be doing the mentorship programs. And most importantly, I'm going to be doing YouTube every single day. So this is one of my goals for me to expand more, and it's to do YouTube. So really looking forward to that. And you guys, I really would appreciate it if whenever I post those YouTube videos, and I'm pretty sure it will greatly benefit you, because the YouTube videos will be about analysis, about stuff that I share on the live trading room, like very, very helpful stuff. So yes, Queen. I can with you, Steven. But yeah, you guys, I'm honestly really excited. I'm really excited, and let's get it going. Let's get it going. I'm also doing a challenge, you guys. I don't want to talk about the challenge just yet, but um, as we progress through, I'm going to share. I honestly have so many exciting things that I would like to do with the team. Now, if you guys notice, one of our team, Christian, has been seeing some amazing growth on his account, mostly trading SPY and whatnot. And that's a strategy that I personally discussed with him a while back, and it's just so amazing to see that he's killing it too. Like, honest to God, I have such a great success using that, and I can even back it up. Like, I can show you guys that that I've made over $35,000 year to date just on SPY, just on the SPY ticker. So I know that I don't alert SPY. I don't send out a lot of alerts. But just know that the education is there, and um, I'm really looking forward to being more involved with the team here. So um, that's all for me for today, team. And I hope you all have a wonderful, wonderful rest of the night. Let's have a good day. By the way, Miss N, I'm looking forward to discussing more with you, and I'm really hoping to be a positive change for your account reversal here. I'll and I hope that in turn helps you trade better as well. Thank you so much. That's all for me, team. And I hope you all have a wonderful rest of the night. Take care. And for those of you that are part of the 2K Cash account, honest to God, I'm so excited. That's all I'm going to say. Take care, all.